Joseph, welcome. So it's almost like they should have moved the date after all they've had 2 weeks to think about this, and it's still tonight.
Yeah, they have. It's led to a lot of conspiracy theories. We think that's overblown. A lot of people have been trying to say, hey, are they trying to hide something? If you think that, you just don't know Nikesh. Nikesh always likes things out front and center and accountable. And so we think that part of the story is a little bit overblown. That said, Fortinet's results 2 weeks ago are the more concerning part. We think that what happened to them can absolutely happen to Palo Alto, and you'll see a little bit of digestion, which will be reflected in the guidance.
Did you say Hewlett-Packard's results?
Look past the results?
Oh, no, I'm sorry. Which company's results were worrisome, did you say?
Fortinet's.
Fortinet, that would make a lot more sense. I'm thinking, wow, I didn't think that they were peers here. Okay, so they were showing shares of Fortinet. And explain why you think that is such a yellow flag.
Yeah, I mean, they're competitors. They both sell hardware appliances. There's reasons why Palo Alto would be more insulated. They have a higher mix of software. But at the end of the day, the past 2 years, we've seen this tremendous surge in products. Just given that, the COVID pandemic led to, the internet doubling overnight. Well, you needed more firewalls to support that. Palo Alto also went through a product refresh cycle. So you saw 2 years of 20% plus product growth. And then what's going to happen is now you're going to have some digestion. So that won't impact this fiscal fourth quarter's results. But at the end of the day, their 1 and 3 year targets are going to have to probably come lower.
So you acknowledge that they've been through this kind of hangover period. What is the catalyst and the bull case for owning the shares here? Why not wait it out a little bit?
Yeah, I mean, we previewed being a little bit tactically cautious, right? But I think once we get past this reset, right, we view this as a speed bump. Then investors can target the $4.5 to $5 billion of free cash flow out in fiscal 26 and lock on. And this company will, over the next 2 to 3 years, drive towards $100 billion valuation.
Yeah. And what would be what would you have to hear today to sort of think, what, maybe there are deeper problems?
I think that for there to be deeper problems, we'd have to hear something along the lines of, hey, this has been a primarily hardware-led sale, and we're not as comfortable selling software only, which we think Palo Alto is really good at selling just software. The problem is the channel might not be as capable. And so if we heard things along that lines, maybe we'd be a little bit more cautious. But at the end of the day, this is one of the better executing companies, better platforms, positioned whether you want hardware, software, cloud. And we think that over the next 2 to 3 years, it remains one of our favorite picks.
All right. Well, I'm assuming the analyst community is not a fan of Friday afternoon earnings calls.
There's nothing I'd rather be doing tonight on a Friday in August than doing earnings.
All right. Maybe they'll start a trend. Joseph, thanks for your time today. We appreciate it.
Thank you.
Joseph Gallo with Jefferies. Again, he has a buy 30% upside for Palo Alto. Jim Cramer will be speaking with Palo Alto's CEO Nikesh Arora, who you just heard mentioned, on Monday at 6 p.m. on Mad Money. That will be a good follow-up to whatever they say this evening.